Good evening, all of you. In the last class, I told you about this source of income and definition of income. Now, what I'm doing is I'm taking into account some receipts which are to be treated as income. What are the receipts that we will come across? Okay, that thing I'm going to tell you. Section 28, subsection 2, compensation or other payments due or received by any person. Section 28.3, Section 28, subsection 3, income derived by a trade, profession, or similar association from specific services performed for its members. Section 28, K, 3A, profits on sale of a license granted under the Imports Control Order Act 1955. Okay, Section 28, 3B, cash assistance received by any person against exports under any scheme of the Government of India. Section 28, 3C, any duty or customs or excise repaid or as drawback to any person against exports. Section 28, 4, the value of non-monetary benefit or perquisite arising from business or the existing or the exercise of a profession. Section 28.5, any interest, salary, bonus, commission, or remuneration received by a partner from a firm. Section 28.5A, any sum received for not carrying out any activity. Any sum received for not carrying out any activity relating to any business or not to share any know-how, patent, copyright, trademark, etc. Any recovery in respect of loss or expenditure which was allowed to be deducted in any year. Excess of sale proceeds of a scientific research asset over its amortized value to the extent of deduction allowed. Next, Finance Act 2006, profits and gains of any business of banking carried on by a cooperative society with its members, any recovery in respect of a debt which was allowed as a bad debt, capital gains, any capital gain under section 45 is treated as income. Insurance profit, any insurance profit computed under section 44 is treated as income. Winning from lotteries, that is winning from lotteries, winnings from crossword puzzles, winning from races and horse races, winning from card games, other games, winning from gambling, winning from betting, employees' contribution towards PF, Provident Fund. Employees' contribution to any Provident Fund, recognized or unrecognized. Employees' contribution to superannuation fund. Okay. Next, employees' contribution to ESI. Employees' contribution to any other fund for the welfare of the employees. Amount received under Keyman insurance policy. Gift of any amount exceeding 50,000 from the assessment year 2007 to 2008. All these things are nothing but the receipts of income. Now, after that, we are going for deemed income. What is deemed income, sir? Deemed income is nothing but going to be the income of a person. Okay, what are they? Income from self-occupied house, presumptive incomes under section 44 AD, section 44 AE, section 44 AF, section 44 BBB, unexplained cash credits, unrecorded and unexplained investments, unexplained expenditure, amount borrowed or repaid on hundi otherwise by way of account pay check. All these things are nothing but the deemed incomes. That is, they are going to be the incomes in the future. Now, casual income, just once in a while it will come. It won't be regular income. So that income, we'll call that thing as casual income. Casual income is any income which is produced by chance. That is, it will come only one time. That is, there is a chance and equally not a chance of receiving such income. Like this, you will come across the casual income. Now, we have to take into account some terminology in income tax. Compulsory, the terminology must be known by any person who is studying this income tax. And one important terminology is nothing but person. Generally, people will think that a person is nothing but an individual, but according to income tax, person is entirely different. Person is entirely different. So, what are the things that what are the items that will come under the head person? An individual, a HUF, a company, a firm, and an association of persons, AOP or body of individuals, BOI, and a local authority, and every artificial judicial person not covered within any of the above classes, that is university. So these six things, these seven things, so not six, seven things will be treated as a person when you go for income tax. Okay, and again I'm repeating, an individual, a HUF, a company, a firm, an association of persons, a local authority, and every artificial and judicial person not covered within any of the above clauses. These things we will come under the head person. Now, an individual, that is a person. An individual means a natural person, that is a human being, including male, female, minor, child, and lunatic or idiot. These are the things that we will come across when we go for an individual. HUF, Hindu Undivided Family. HUF is a family consisting of all persons lineally descending from a common ancestor and includes their wives and unmarried daughters. A company, it is nothing but a joint stock company. A company is an artificial person incorporated under the Indian Companies Act of 1956 with an independent legal entity with a purpose, with a perpetual succession, and with a common seal, with a common capital in the form of transferable shares, and with a limited liability to the shareholders. That is nothing but a company. A firm means a partnership firm whereby two or more persons agree to share the profits and losses of a business carried on by all or any one of them acting for all. An association of persons, AOP. An AOP is an entity or unit of assessment where two or more persons join for a common purpose with a view to earn an income. It is a voluntary getting together of persons for a common design or combined will to engage in income producing activities and may also include non-individuals as its members. A body of individuals. A BOI is a conglomeration of individuals who carry on some activity with the object of earning some income. This is about this. Okay, BOI, sorry. A local authority. A local authority may mean and include panchayat as referred to in clause D of Article 243 of the Constitution, or municipality as referred to in clause E of Article 243P of the Constitution. Municipal committee and district board legally entitled to or entrusted by the government. These are the various things that will come under the head. Okay, local authorities. Every artificial judicial person not covered within any of the above clauses, like a university. So all these things we have to constitute as a person. Now, after that, SSE. That is, a person who is ready to pay the tax and who is going to pay the tax, we'll call him as an SSE. A person who is liable to pay tax or any other sum of money, interest, penalty, etc. under the Income Tax Act of 1961 is an SSE. Every SSE is a person, but every person need not be an SSE. This thing you have to keep in your mind. Every SSE is a person, and every person need not be an SSE. Okay, this is about an SSE. Next, agricultural income. That is income which we derive from agriculture land. That is nothing but agricultural income. Average rate of income tax. The average rate of income tax means the rate arrived at by dividing the amount of income tax calculated on the total income by such total income. It is levied at progressive rates applicable to different slabs of income. These rates vary from 10% to 30%. The first exempted slab being 2,50,000 in case of individuals, okay, resident in India who is of the age of 60 years or more, HUF, AOP, BOI 3 lakhs, and for every senior citizen 5 lakhs rupees. Average rate is equal to total tax including surcharge and education cess by total income into 100. Next, maximum marginal rate, MMR, section 167B. It means the rate of tax for an individual which is applicable to the highest slab of income. At present, for the assessment year 2020 to 2001, MMR is 30% and educational cess at 2% plus 1% higher and secondary education cess and 1% health cess. Assessment year. Assessment year is a period of 12 months commencing on the first day of April every year and ending on the last day of March the next year. Previous year. The year before the assessment year is nothing but the previous year. Previous year is the period of 12 months before the commencement of the assessment year. Generally, it is a financial year, that is 1st April to 31st March, preceding the assessment year, as the assessment year always immediately follows the previous year. First previous year in case of newly set up business or profession or any new source of income coming into existence. In case of a new business or profession, okay, set up, or in case of any new source of income is coming into existence, then the first previous year for such business or profession or the new source of income is the period starting from the date of commencement of the new business or income up to the following 31st March. Previous year in certain cases, cash credits. Section 68. In any case, if any SC is unable to offer any or satisfactory explanation about the nature and source of any sum found credited in the books of accounts to the assessing officer, then such amount shall be charged to income tax as income of such previous year in which the amount is found credited. Unexplained investment, section 69. Next, unexplained money, section 69A. Amount of investments, etc., not fully disclosed in the books of accounts, 69, section 69B. Unexplained expenditure, section 69C. Amount borrowed or repaid on hundi, section 69D. So these are the various, okay, previous years in case of, okay, in certain cases. Now, exceptions to the rule of previous year, situations in which income of previous year is not taxable in the immediate following assessment year. Okay, first one is shipping business of non-residents, section 172. Previous persons leaving India, section 174. Assessment of AOP or BOI or artificial judicial person formed for a particular event or purpose. Assessment of a person trying to transfer his assets with a view to avoid tax, section 175, discontinued business, section 176. So these are the various things that we will come across, okay, where the previous year, will be according to that financial year versus assessment year versus previous year. Financial year is a period of 12 months commencing on 1st April and ending on 31st March. Assessment year is the year immediately succeeding the financial year. Previous year is the income year or the financial year in which the income will be subjected to tax in the assessment year. While a financial year and assessment year will always be of 12 months, a previous year can be less than 12 months also, say in case of newly set up business. Next, PAN, permanent account number, section 139A. Every person who has not been allotted a permanent account number, PAN, shall within such time as may be prescribed apply to the assessing officer in form number 49A for the allotment of permanent account number. Permanent account number means the number which is allotted by the assessing officer to the assessee for easy identification. In case of need, this number is useful to trace the previous returns submitted by the assessee and assessment orders passed on by the department. The assessee has to code the PAN in all future correspondence with the income tax department. Next, what are the provisions that we come across? Every person, if his total income exceeds a maximum exemption limit, or any person carrying on business or profession whose total sales or turnover or gross receipts are likely to exceed 5 lakhs rupees, charitable trusts or religious institutions, central government may specify any person under the law to obtain PAN. Example, exporters, importers, assessees to whom excise rules are applicable, persons who are registered under the Central Sales Tax Act. Quoting of PAN has been made compulsory. Rule number 114B in the following cases with effect from 1/11/1988. Sale or purchase of any immovable property valued at 5 lakhs rupees or more, sale or purchase of motor vehicle other than two vehicle, which requires registration under Motor Vehicles Act of 1988, time deposit exceeding 50,000 with a bank or banking company or banking institution, deposits exceeding 50,000 in post office savings bank, contracts for sale or purchase of securities exchange, securities exceeding 1 lakh rupees. If a minor intends to open an account in a bank, he can mention his father or mother's PAN as reference. Application for installation of a telephone connection, including cellular connection, payment of hotel or restaurant bills exceeding 25,000 at any time, 25,000 rupees at any time during the previous year. A person on whose income tax at source is likely to be deducted, payment of cash for purchase of bank draft or pay orders or bank checks from a banking company to which the Banking Regulation Act of 1949 applies, for an amount aggregating 50,000 rupees or more during any one day, deposit in cash aggregating 50,000 or more with a banking company, payment in cash in connection with travel to any foreign country of an amount exceeding 25,000 rupees at one time, making an application to any banking company to which the Banking Regulation Act of 1949 applies, for issue of a credit card, payment of an amount of rupees 50,000 or more to a mutual fund or fund for purchase of its units, payment of an amount of 50,000 rupees or more to a company for acquiring shares, payment of an amount of 50,000 rupees or more to a company or an institution for acquiring debentures, payment of an amount of 50,000 rupees or more to the Reserve Bank of India for acquiring bonds, payment to a dealer for purchase of bullion or jewelry worth exceeds 5 lakhs rupees or more at any one time. These are the various things that we come across regarding the provisions under the PAN. And that means in all these cases, you have to quote the PAN number compulsory. Now, the penalty. What is the penalty? If any person fails to comply with the provisions of section 139A, that is PAN, he has to pay a penalty of 10,000 rupees. Quoting of PAN is not required in case of non-residents and the persons who do not have any taxable incomes but may have agricultural incomes. Rule number 114C. The SSC is required. The SSC is required to initiate the assessing officer any change in his address or in the name and nature of his business. Like this, you'll come across regarding the provisions of tax. Okay, tomorrow, I'm going to complete this rates of tax for the assessment year 2021. Okay, these are nothing but the slab rates. Very senior, super senior citizens, that is above 80 years of age, income up to 5 lakhs, nil. 5 lakhs, 1 rupee to 10 lakhs, 20%. Above 10 lakhs, 30%. Senior resident citizens, 60 years or more, but less than 80 years, up to 3 lakhs, nil. 3 lakhs, 1 rupee to 5 lakhs, 5%. 5 lakhs, 1 rupee to 10 lakhs, 20%. Above 10 lakhs, 30%. Resident individuals, men and women, including HUF, BOP, BOI, aged below 60 years of age, up to 2,50,000 nil. 2,50,000 1 rupee to 5 lakhs, 5%. 5 lakhs 1 rupee to 10 lakhs, 20%. And above 10 lakhs, 30%. Rebate under section 87A. This is also very, very important. A resident individual can avail rebate under section 87A if his net income does not exceed 75 lakhs. It is deductible from income tax before calculating educational cess. The amount of rebate is 100% of income tax or rupees 12,500, whichever is less. Surcharge and tax for the assessment year 2020 to 2021 for individuals or HUF or AOP or BOI or ABP. Surcharge is 10% of income tax if net income exceeds 50 lakhs but does not exceed 1 crore. If net income exceeds 1 crore, surcharge is levied at 15%. It is subject to marginal relief in the case of a person having a net income of exceeding 50 lakhs. The amount payable as income tax and surcharge shall not exceed the total amount payable as income tax or total income of 50 lakhs rupees or more than the amount of income that exceeds 50 lakhs. Similarly, in case of income exceeds 1 crore. Okay, so these are the various things that we will come across. And tomorrow we are going to study the remaining aspects of income tax. Thank you. Thank you very much. And I request all the people, okay, this is only, I'm telling all the people that this is only a theory part as well as an explanatory part. And what I have read is the points I have noted. And I have read that. So please understand that this is only a theory part, okay, because we have to know each and every item when we are going for this income tax. Okay, so regarding the other aspects in the next video class I'm going to take. Thank you. And don't try to avoid. Okay, please subscribe and make me to go further. Okay, on you on subscription. Okay, it is nothing but an encouragement for me to do more video classes on different subjects as well as aspects. Okay, thank you very much.